Hello there. This is the Euro and New Zealand dollar. As you can see, this is a 4-hour chart. Actually, this expanding triangle that you are seeing in front of your eyes is visible on the daily chart as well, just that this 4-hour chart is a bit zoomed out so that we can see as many candles as possible. And the reason why I want to take a look at this expanding triangle, this is the expanding triangle, is related to the fact that such an expanding triangle is quite a rare formation. While most of the times price consolidate in contracting triangles, either in B waves type, in fourth wave types, or in X wave types, or part of a larger degree complex correction. Expanding triangles are quite rare, and they happen to be only on two different places, either as B waves in part of either of a flat or a zigzag in the B wave, so A, B, C, or either as a fourth wave after a third wave advance. Now this move here that started all the way here to the downside, so let's mark here the downside. So this move here normally looks like an impulsive move with the 1, 2 here, then the third wave advance to the upside, and from this moment we are looking at this expanding triangle. Contracting triangles, like mentioned earlier, are quite common, but expanding triangles are not. They are supposed to be found in the same places like a contracting triangle does, with a few exceptions. Now, expanding triangles are quite tricky in the sense that each and every leg of it makes a new high or low. Take a look here. This is the first leg, then makes a new high to the upside, then the next one makes a new low to the downside, then a new high, and then again a new low. And the reason for that is normally people are placing, or traders, the majority of traders are placing stop losses or invalidation area above the recent highs or below the recent lows. And because of that, we have these people being stopped out only for price to reverse, stopped out here only for price to reverse, and so on and so forth. So this is why expanding triangles are that tricky. Now, for the purpose of our analysis here, an expanding triangle means 5 different waves, so no less than 5. So let's say that this is wave A. Let's change the color a bit. So this is A, then a B wave to the upside, so A, B. Now we are looking for a C wave, and of course the C wave is the one to the downside, so price goes to the downside, makes a marginal new low when compared with wave A. So A, B, and then the C wave to the downside. Then we have a nice flat, most likely to the upside, so we have A, B, C, D here to the upside, sorry. Price makes a marginal new high when compared with the highs in the B wave, only for the E wave to the downside here to come in the form of an irregular flat, most likely. And now we are having a marginal new low when compared with the low in the C wave here. Now what to do next? Well, of course we are looking to the upside now, because such an expanding triangle means that out of the 5 different waves, each wave is supposed to be bigger than the previous wave. See here, the B is bigger than wave A, the C is bigger than the B, the D is bigger than the C, and the E is bigger than the D. The beauty of expanding triangles comes from the fact that not only each wave is expanding, but normally they are expanding also in time, not only in price. So if this is the moment of time, then wave A begins, or the expanding triangle begins, then take a look here. This is the moment of time. Well, this is the time taken for wave A to form. Then the time taken for the B wave to form is a bit higher, so the expansion rule applies here too. Then the time taken for the C wave to form is yet again bigger than the time taken for the B wave, so the expansion rule applies to the time element as well. Then on the D wave here, D being even bigger than the C wave in terms of the time taken for wave to consolidate, not to mention the possible E wave here to end. So as you can see, expanding triangle is moving sideways, expanding in price, and so expanding both in price and time. According to Elliott wave counts, normally this should be labeled as the third wave to the upside here. Let's make it of a different color so that we know what we are talking about. And normally this should be a fourth wave type, and this fourth wave type should translate with price moving higher and being attracted to the highs in this area above the B wave of the possible irregular flat, so 172.77 to be challenged. So the normal thing to do here is just to buy calls, and remember that when you are buying calls, you are looking for price at the expiration date to be bigger than the striking price you bought the option for. Basically you are looking for going long at the market on the regular market, or just buying calls. It is exactly the same. So let's just write here that what we want to do is to buy calls. So buying calls for, and this is the expiration date, because this is a 4-hour chart, a bit zoomed out, but normally it's seen on the daily chart as well. We need to have quite let's say a big expiration date, in the sense that things are not moving that fast. So we are looking to buy these calls for 1 week expiration date. First of all, we are trying to avoid any volatility from the Fed, and if this expanding triangle reverses to the upside like it is supposed to do, then this should come in 1 week, and we should be well above the current levels. In terms of Elliott waves, you have 1, 2, 3, 4, and normally the first wave should be labeled to the downside here. So this to be the first wave. Corrected by an irregular flat here with a C wave failure normally for the second wave. So 1, 2, 3, and then the expanding triangle on the fourth wave. As you can see, even the principle of alternation is being respected between the fourth and the second wave, and the logical thing to do now is to buy calls for the 1 week expiration date. And if you're trading the currency market or a spot market, look for this target to be reached. This is what I wanted to show you for today here on fairbinaryoptions.com and buying calls for 1 week expiration date on the Euro New Zealand dollar. In terms of fundamentals, this is the day markets expect for more than 3 months now. Fed is going to come today with the projections, and FOMC statement is going to be released. We'll see if they decide to taper, if they decide to postpone the tapering. In both cases, what we are sure we're going to have is volatility. So if you're trading binary options, then during that moment of time, look to trade short-term expiry options like 60 seconds or 1 or 2 minutes, or 2 minutes or 5 minutes expiration dates. But if you're looking for the medium to short term, then try to go for a couple of days expiration and even 1 week expiration date. Thank you very much for being here with us at fairbinaryoptions.com, and stay safe on the markets. Bye bye.